Okay, perfect. So the environment that we're in right now is a negative yield curve. Now, with the last time that this happened, it caused a worldwide panic. There was a worldwide crash. So I really want to bring your attention to that fact that 2007 is when the stock market started falling completely. 2007, end of 2007 to 2008. But this is a precursor to what could happen in the near future. Okay. I'm sorry, guys, if the internet gets a little bit buggy. I'm working on it. Okay, and this pattern is a flag pattern too, right? This is a definite continuation, a slide lower, lower, and lower. All right, so we are back into connection. I don't know what's happening. Pissing me right off. Let me try something else. I don't know if that'll fix it. I hope it does. Just, ugh. Come on. No more cutouts. Okay, what were we talking about? Let me get through chat and make sure that you guys feel like I'm answering your questions. Okay, so let's have a look at the different trends that we're having. Trends are very difficult to sustain in the current environment. Now, central banks have been really negative with their monetary policy and their outlooks for their respective governments. The latest news we had was from the New Zealand government, and they were really negative, and Draghi also yesterday as well. Now, the things that we heard from the Royal Bank of New Zealand was pretty negative. Basically, they were willing to lower interest rates if the slowdown, the economic slowdown, continued. And this is really indicative of a whole entire world trend where they're not the only government that's negative. Mario Draghi also came in and said that the fiscal stimulus program, the fifth one that they're on, numero 5, numero 5, was pretty negative. And also there was one more news event that I wanted to direct your attention to, and that was from China. If we move on to trade wars, China has been showing some really serious signs of slowdown, and this really indicates China's the world #2 economy, right? In the world, by GDP, by how much they produce and consume, they are #2. So it's really important because if the Western world, right, Canada, Mexico, the United States, a little bit of South America, a little bit of Europe, they're all tied into the US economy. Well, now China and all the countries around China, including India, including Australia, are very tied into their economy. Now, I don't see it right here on the graph, but basically the Chinese industrial profits came out. It came out yesterday. I don't know why I can't see it. Chinese industrial profits, or it could have been last week. It's a really strong indication of what's going on in the industrials field, right? How much they're making. Now, a lot of times the Chinese have the opportunity to falsify that information, but because it's in their interests as well, because it protects their own trade partners, they're the first people to suffer. There's actually no reason to falsify if things are actually good. And the drop in Chinese industrial profits was a 14% drop from last year. 14% drop. Like if their GDP dropped by 14%, we would all enter a recession. Russia, China, Malaysia, Indonesia, North Korea, Japan, everybody would instantly hit a recession because they're super, super integrated with the Chinese economy. And speaking on trade wars, it's not only the Chinese economy. Like if we look at their stock market, it's not only the Chinese economy that's tied into the trade wars with the United States. Now, what the Chinese are doing in order to get out of these risk-on appetites from China is, or relating to their country, is they're making deals with the European Union. See, Chinese are very industrious and very, they're quick to stay ahead of the curve. They see that all of this will be negative. And the European Union, believe you me, they also see that the US is so busy just beefing with everybody, you know, just fighting and arguing with everybody, that there is no productivity. And there was an interview that I heard from Norway. Now, Norway is also part of a northern union with Denmark, with Liechtenstein, with the countries that are around it. And they also piggyback on the trade agreements with the European Union. Now, the problem here is that Great Britain is now, you know, strolling out on the market. They're single. Great Britain is now single. Come on, have some new trade negotiations with Great Britain. And basically, nobody wants to do that. Everybody sees the US and Britain as bullies, as inadequate, and as toxic to any kind of productive, mutually beneficial trade agreement. So the Norway, the Prime Minister of Norway actually came out. The Prime Minister of Norway came out and said that we are not looking to have any kind of trade partnerships with Great Britain, and we are against them entering into our trade union. So things are looking worse and worse and worse for Great Britain, and honestly, nobody can make sense of what's going on in their politics. It's quite a bit of circus mumbo jumbo, basically. So back to trade wars. Besides the Chinese-US relations, we also have the US negotiations with Canada and Mexico. Now, if before I was a little bit more bearish on the dollar CAD because I believed that the oil price would also piggyback the Canadian dollar on it, well, now there's a totally different picture. The first thing that we have here is a triangle that kind of looks like this, but it's more of a right triangle. As you see, price is like this movement right here where we didn't come to the lower end of the triangle. Excuse me, that's not the right one. Trend line. So from here to here, you can totally see that this triangle is a little bit more to the upside. And we've been in a flat. This is exactly 68.2% of the Fibonacci retracement. Fibonacci levels from here to here. 61.8 exactly. So this was a correction. This is the original impulse. That's it. We've corrected, ladies and gentlemen. The Canadian dollar has connected all the way to this level, and now we are back just trying to get out of that. So what the news that I have for you is that the Trump administration last night has rejected lowering or taking off of tariffs from imports of Canada and Mexico. Now, the US conducts their international affairs in such a way that they make the rest of the world reliant on them, right? The US is like a abusive boyfriend or an abusive girlfriend, where they make the other parties so reliant on them that they can manipulate and, you know, dictate their own terms. And so their nearest neighbors, Canada and Mexico, are very heavily reliant on the United States as their #1 importer for their goods. And both nations, they have a lot of natural resources. And the US is, of course, taking advantage of that. And so right now, the Trump administration has rejected any notion of lowering tariffs from Canada and Mexico. This is a huge blow. Before, with the NAFTA agreements that were negotiated last year, end of last year, we thought it was fine. They came out with public statements that we are going to renegotiate NAFTA, sorry, that we have renegotiated the NAFTA agreement, that we are going to be more lenient towards our trade partners. And now the Trump administration has become very ballsy, right? We talked about Trump being forgiven, that he is no longer under suspicion, under threat of being indicted for collusion with Russia in the 2016 elections. Well, now they have become more confident in themselves. They have become more sure that they can do whatever they want and they will get away with it. And that's the era that we live in, you guys. So Canadian dollar and Mexican peso will suffer because of this. So if you are looking for trade positions, now keep in mind, I say that there's not a ton of room. Like this kind of move, we may not be able to see it, but we will be able to see a return to 136. Now, historically, the Canadian dollar has stayed within those limits. The highest it's been in the last 2 years is at 137, 138 basically. If we look historically on the US CAD, so 138 was the highest it's been in the longest time. Yeah, right here, 138. The highest peak that they had was when oil fell really sharply at the end of 2016, or sorry, at the end of 2015, start of 2016, and that was at 146. And that was a huge climb, parabolic climb, that caused a really sharp decline. So we're kind of going to be in this sort of flat, and you can see that in all of the assets that we trade. So my trade recommendation to you guys is pull out your options trading platform like we have here, options trading. Pull out your daily graph or your 4-hour graph or the hourly graph. Put on some trend lines, put on some support and resistance levels, and trade between those. Again, I recommend being patient, waiting for weakness, waiting for good deals. Again, we're shoppers, we're traders, and we shop for good deals on the financial markets. So for those of you shopaholics out there, be careful, have patience, and try to wait for the best levels down below. And we'll go through some of those right now. I wanted to have a look at the Mexican peso before we go on somewhere else. So this is where we're at for the Mexican peso. Again, very clear, very simple to understand. Consolidation that we're in. For those of you that are looking for a good trade, to short from the current price would be a great idea. Look at where the Mexican peso is at. This huge growth was that Donald Trump tweet from his administration. It wasn't a tweet, it was more of an official statement. But this is yesterday's candle signifying that Mexico is going to have some problems. And where we're at today, if we drop down to the hourly time frame, we could have a retracement from this level. As you can see, it's a bit of a flat. Now, this indicates that we're at the end of whatever growth period we had. Now, if price breaks above this candle and we stay above it, you could look for a continuation, but make sure that it has this sort of pattern. Now, you guys, this is really important, so pay attention right here. This is what we call price action. Oh, man. So you see how the price action is upwards? It's upwards. It's not sloping down, it's sloping up. It's very important that if we break above this level, that we also have a upwards slope. If we break down through below this slope, so again, we break up, we break through, you can wait for a retracement, and then I would short it. Now, the reason I recommend shorting it is just because of the parabolic move that we have. Every time we have parabolic moves that represent this, we have consolidation. And so if we put on the Fibonacci level from, I would even take this impulse because it's just a non-stop growth impulse that we've had. we can drop down to previous support levels right here. But again, that would be if we have the correct price action on the chart. All right, so that's the trade war situation across the world. Europe is next. I want you guys to keep that in mind. Europe is definitely next for who's going to get the American. So German automakers and Europe in general are very keen. And like I said, everybody's super keen on getting into ties with China because they're the second biggest economy. If they're more friendly, if they're about growth and prosperity for the whole world, for everybody, it's a win-win situation. When was the last time we had win-win politics? I don't remember. I don't remember last time there were win-win politics. So if we can transition from an isolationist environment to win-win politics, then we can see risk-on appetite from investors across the world. Then more and more people would be willing to park their money and to have growth. And that's what we as traders need. You guys, we together, we need investors to be calm. We need them to be collected, cool, and invest so that we can then, okay, this is growing, let's speculate on that. That is growing, let's speculate on that. When we have uncertainty and risk, it's really, really difficult to get money when everything is bad. When there's choppy markets, it's good for us, and that's what we're having now. But I'm sure a lot of you beginners are struggling with that concept. And so that's why I draw these trend channels and try to propose to you that we have more consolidative trade strategies, and that's using Bollinger Bands. That's using oscillators, right? Oscillators are things that help us understand, okay, we reached the peak, we reached the bottom, and we can throw that on. Let's have a look at the euro-dollar graph and put on some indicators. So for some reason, the Elimtrade platform destroyed my the things that I put on the graph, which is fine because we have an opportunity now. Now see what I did with my graph? This is also very important. I'm on the daily graph when I put on support and resistance levels. And on the daily graph, I want to zoom all the way out so I can look at this picture from far away so I have a bigger understanding. Because if you're looking at graphs like this, all you can see is like the little black lines, the little wrinkles. But what exactly is price doing? How big is the channel? We don't see that. That's why you want to zoom all the way out and use really precise, well, not precise, that's not the right word, but you want to use holistic support and resistance levels. So let's draw some of those right now. So right now we are currently at a pretty strong resistance level, you guys. So this could be an opportunity to buy some euros. Now I'm going to draw a few of these because there's a few levels that we have. Now, do you guys see what I did here? This is also more of an art than a science. I want you guys to understand this as well. I'm not a scientist, okay? I am an artist. I'm just kidding. I'm a little bit of both and a little bit of a mathematician. And you need to have experience in a lot of different sectors or a lot of different professions to be a great trader. The best investors that I knew, they were guys that just knew a lot about a lot of things. Not a little bit about a lot of things, but a lot about a lot of things. And so what we do here, if you see that I kind of cut off the top here, didn't reach the top here, and just made the top here, but also I exactly put the top there, I want to take the tops and average between them. I want to have a level that I know, okay, 10 or 20 points above or below this level, we could have a reversal. And like I told you guys many times before, I don't trade level to level. I trade 2/3 of whatever I'm trading. So if I get 2/3 of my trade, I'm happy, I'm out. I take my profit because that is money in my pocket, that is bread on my table, that is bacon that I'm bringing back home. And assalamu alaikum, I'm trying not to eat bacon. All right, you guys. So here we have the bottom level, same thing, right? I cut off this guy a little bit here and I totally cut off there, but they are, you know, they're exceptions to the rule. Not really exceptions, but they're areas that I'm watching. So I understand that that's not one line, it's a box. And when we use MetaTrader, we'll be using boxes. We won't be using lines. It's just that there's no box that I can draw with this graph. Anyway, so right now, currently, we are at a strong level of resistance, but all that price is doing is showing us that it is willing to continue down lower. And a lot of that is due to Mario Draghi's statement. He came out yesterday and they were really, first of all, German bond yields have dropped into negative territory. That was a surprise. So that's another reason why the euro is falling. And also Mario Draghi talked yesterday, Wednesday was yesterday here in the evening. Here we go. Yeah, Mario Draghi gave a speech yesterday and all of them talked on the negative connotation of the CPI, the GDP, the rising inflation, the falling wage growth, a lot of issues that they had to discuss, and discuss they did. So they came out more dovish and more negative on their economy, but it wasn't as influencing, it wasn't as volatile as the Federal Reserve meeting, because the Federal Reserve really put the hammer down and said that, okay, we are officially entering an area where we are willing to drop rates. Now, those economies, the U.S. economy and the Australian and New Zealand economies, they have room to go back, right? They have room to lower interest rates. Now, think about those economies that don't have that room. Think about Japan that has a negative 0.1 interest rate. Think about Switzerland that has a negative 0.25 interest rate. The ECB that has a 0% interest rate. These economies are in some real trouble. Excuse me, the Swiss National Bank, actually, their interest rate is minus 0.75. They dropped it just a little while back. So those are all inclinations that if we do enter a recessionary period, how does it usually work? How does a recession work, right? We have major growth, we have really solid stock markets, we have solid currency, and the central bank starts raising interest rates. So money is more expensive and the dollar goes up, or any kind of currency goes up. And basically, the economies that don't have an interest rate that allows them to drop, they are not going to fare well. They're going to do some other really extreme things in order to stabilize their currency. And in the end, that will be more difficult for them to navigate these murky waters that we're in right now. I want to spend a few moments in chat. We spoke for about half an hour now already, and I just want to say hello to some guys that are there. Fivhad, hello my friend, good to have you with us. Justice Mfahi, good morning to you as well, sir. Mildava Fadar, hello. Momo Bit, all right. Sir, oh, Louisiana, hello. Sir, I must admit, since I come for your webinars, my trading skill improves. All the information that you share really helped me to confirm my choice. I'm so thankful. And I'm so glad that you guys come here. I'm really, really grateful that you guys are making such good progress. I'm really glad that these webinars, the way that you ask questions, the way that you learn, that we can conform to your needs. I'm really glad that we go through such a wide amount of information. At first it seems overwhelming and difficult, but when you come more often, all the different things that happen in the financial markets, we talk about them, we go through them. And that allows you to make sense of the political landscape and of the financial landscape. So I'm also very grateful that you guys come. Momo Bit has been trading for 5 months. Wow, good to have you with us, sir. So we have some experienced traders. Mildava Fadar, I'm trading for 1 week. All right, good on you. I'm doing option trading. All right, MTS 16, good. Iola Raphaels just started trading yesterday. Wow, welcome, bro. All right, 1 month. Vicky, that happens. I hope you're not losing real money. So Vicky Mishra says she's been trading for about a month. Trading for 15 days, MTS 16, good stuff. Looking fresh. All right, hold on a sec. I missed some questions. All right, using the Japanese strategy. Mildava Fadar, can you tell us what the Japanese strategy is? That sounds awesome. Or you're just talking about the trade that we had, making money on Japanese growth. So, and dang, been trading for 3 months now. Okay, that's fine. Like the demo account is a constant part of your life. Even when you've been trading for a long time, you still use the demo account to try new strategies, right? So don't worry if you guys use it. It's fine. FK Onin, how to deposit. Click the deposit button right here. Hello, sir. PUBG Gamer. Hello to you as well. Rock on, bro. Test Geeky, been trading since the last 7 to 8 days, deposited 40. Whoa. Now, what I want you guys to do, if you ever make double your money, withdraw half of it right away. This is a great opportunity for you not only to make money, because all beginners, they first make money and then they lose it all, guaranteed. Like, oh, have I been there for real? So if you double your money, if you deposited 40 and you're at 95, take off 40, withdraw that 40 and be ballin'. You just made double your money, like a all-star trader, like a professional trader. So I wish you luck. Make sure not to lose it, right? Keep in mind that the number one rule is don't lose money. Nice. So 6 out of 10 trades, 60% is a huge risk-reward ratio. I have had risk-reward ratios of about 40% throughout my trading career, but I make it out because that 40% makes 80% of my money. So even if I lose 40%, I make 80 on the winning trades, which is fine. All right, Louise and Lou, I reach my daily profit target every day, but max 5 trades per day. I like that you go through the market analysis every day. Exactly. I like it too. It's very important to understand the reason why. Because just looking at the graphs and not being able to read high quality news is really detrimental to your trading. I mean, I know guys that use technical analysis, but I also know that they're not very good traders. So I really recommend using a combination of everything. And sentiment is very important, and that's what I try to help you guys do every day. I help you to read sentiment. Now, Lopang Kopenang has been practicing demo for the past 3 weeks to learn some basics first and some indicators that can suit me, but it's getting better. Oh man, like you guys also inspire me. This is something that we don't talk about, but when I also have bad days. I have bad days live, right? When I make a trade and you guys see that it's negative, not only am I like, well, to myself, I'm like, okay, that's fine. That's a part of life. But then I worry that, oh no, this is undermining my credibility, which is not, because everybody trades. But even I have bad days. So when I see beginners making money and beginners grow in confidence, I automatically get a confidence boost. Like I know what drawdowns are like. I know what good days are like. And so your confidence, it kind of seeps into me as well, if that makes sense. And so I'm really glad that a lot of you share this information in chat. Now, Glammy Twisted said, I just joined in, but I have been waiting for 13 minutes, had to reload. Okay, that's not a problem. I had to reload my OBS today as well, Open Broadcasting System. For some reason, I got these crazy lags. I don't know, maybe Russia's under cyber attack or something, but I have like a fiber optic cable connection to the office, so I don't know what's going on. Anyways, I'm missing a lot of information. Tanvir, when we do have a pause, so guys, I don't know if you can see on the screen right now, whenever there is a pause and OBS says it's disconnected, I stop talking. I know that you guys can't hear me, so I just stop talking. So don't worry, you're not missing anything. As soon as we have that little OBS sign, I'm like, okay, I turned off. So that's the kind of thing, okay, guys? So don't worry. I'm not saying anything if the site has disconnected. How much rise is expected in the euro? Right now, that's a good question. Alex Mercer, I swear, Alex Mercer is a billionaire hedge fund manager. Alex Mercer, first of all, good to see you again. It's good to have returning viewers. Second of all, right now, this kind of chart pattern does not give me confidence that the euro is about to turn around. This looks like the euro is going to keep dropping, right? We broke through this level. This candle almost was an engulfing candle, but almost never cuts it. Almost never works. So it looks like the euro will go back down, but we are above this level of support. Now keep in mind that it's not like a scientific level of support. It's not precise, but just this area. As long as we stay, around this area and not above these highs here, then I do believe we're still, that was interesting. We're still going down. It looks like we're going down lower just from price action and the parabolic SAR. I mean, we can put in the stochastic here or the RS. So I just put on the stochastic right here. Also, we can put on the MACD, right? And none of them are showing us good trade signals. So we dropped above the price here, and we got the 5 candles that I taught you guys yesterday. But obviously, price isn't going up. I mean, here we have on the 5th candle, 1, 2, 3, 4, 5. Yeah, on the 6th candle, we dropped down. So this probably would have stop lossed you out. So again, I wouldn't trade right now too much to the upside, but we do have a channel that we're in, and when we break out here to the top, there's a lot of upside. So trading in this channel, but again, I want to break of this level and then of this level, and then we can trade to somewhere around here, right? This whole channel we can catch. This whole news we can catch. How to trade economic news. Tushar Kumar, basically you look at the at the forecast, like this column here is the forecast, and if the actual comes out, like the best example was oil yesterday, right? If we look at the oil price, here we have the oil price, and this red candle that we had was mostly the end of the day trading, and it came out during this crude oil inventories. We thought we were going to have a drop, right? The less Okay, are we back? Okay, so the crude oil inventory actually rose and not dropped, and that's bearish for crude oil, right? If we have more supply, then everything costs less. Basically, it's that principle of supply and demand which runs the markets, and this is a very easy, and this is one thing that I recommend trading every week. Crude oil inventories has a very easy to read reply. If before, like 5 years ago, 10 years ago, non-farm payrolls was how traders got paid every month, well, excuse me, crude oil inventories, when I talk about money, I start to get thirsty. Crude oil inventories is a way that you can make money every single week just by trading the economic news. Okay, if there's a 20% difference, then there will be volatility on the market that you can make money off of. Oh man, I'm looking in chat right now and I see something that I like. Justice Mafahi. Ooh, I like what I see. Okay, guys, look at this is how you should write. This is how you should write your questions. So Justice Mafahi wrote, I entered long on Euro CHF using support and resistance on the D1 chart. What's your take? Oh man, already, like, I don't know if I can say this on live broadcast. That makes me horny. I love it when people talk like this. Already, what I want to do is open up my chart and have a look at what she's talking about. Let's do it. Okay, so Euro franc. Euro franc actually is done. It reached that level that we thought it would. Remember, I told you guys we're going to reach 111.83. We reached it. Good. Let's stop that trade. As soon as we reach that level, a fade would be what professionals are looking for, right? We reach a really strong support and resistance level, then we fade it. And that's what was happening today, fade. On the D1 chart, what's your take? So we are on the D1 chart right now. My take is the fade is done. We could have a continuation pattern going on. I want to see what the day finishes because we are on the daily time frame. Right now, there's nothing else to get because price got all the way back down to the 0 line. You see, this was the impulse from here to this level here. And then we waited. Then we dropped down, retraced, and then from here was the perfect opportunity to short. And all day yesterday, the price fell down. So if you were in that trade, like I recommended yesterday, you would have made money. And then today was a fade. All professional traders fade all big moves. This guy here was also a fade. After this big move down, traders faded it. But these are day traders, right? These are people who sit at the graph every single day. They trade every day, so they catch little moves like this. That's their livelihood. And that's kind of one of the things that I want to teach you guys to do as well. I want to teach you to make everyday money from the stock market or from the financial markets. Next question, again, Justice Mafaki. Australian dollar, New Zealand dollar broke the trend line. And the trend line here being the EMA 50. On the D1 time frame, will it still go bullish, which shows trend reversals? I haven't looked at this currency in a super long time. So remember, we draw trend lines from the bottom to the top. It looks like we didn't break the overall trend line. This is one of the trend lines. This is a second trend line. So we didn't break any trend lines, but we did get above the 50 EMA. We're also at a level of confluence right here. RSI or Williams percent R indicator was a little bit overbought, but this really gives us nothing to trade out of. But we do see the positive divergence here. See how we're aiming price down here and we're aiming price down here. So Justice Mafaki, this is going to be more of a short trade, right? I would short this. Now this huge spike up was weakness in the New Zealand dollar, but the Australian dollar is just as weak, Now the So unfortunately, I was asleep when the Australian government came out with their new press conference. But basically, there's a lot more news for the New Zealand dollar coming out in the next little while. I would wait until maybe Friday. But again, Friday is kind of a day of reversal. So this is a tricky pair. Right now, as it stands in what I see right now, it's more of a continuation to the downside. So this huge spike just met the status quo. We just touched the top of the trend. There is no breakout. There is no breakout confirmation. If we were to trade this sucker, I would want to see something like this. We break out maybe to this trend line. Then we drop down to this trend line and support. And then when we have another inclination of another breakout, again, it's more choppy. This is what I'm talking about, you guys. Like, I would fade any move on any asset right now. The situation that we're in right now is a consolidation for weeks and months. All right, this isn't something that's going to change. Every single government is struggling to find a way to boost their economy. Every single central bank is contemplating a way to increase fiscal stimulus, to increase or decrease fiscal policy, which is lower interest rates, try to get inflation growing like Japan and Switzerland. So my suggestion right now is fade any kind of move. Right now, you could probably fade the Australian dollar and New Zealand dollar, but I urge you to be careful because there is a lot of news from New Zealand that are probably mostly going to be negative. Like everything that we have from New Zealand in the next little while to come is going to be negative. Like building consents, probably not going to reach 16.5. And as you see, they're not even making a forecast. They're not even making a forecast. So that's usually not a good indication. All right, so how does the MetaTrader different from a limp trade? Kago Jane will go through that on Tuesday. It's a much more powerful platform. It's much easier to use. It's also it's just, it gives you more options. It gives you a lot more options. And you can use an online version, you can use an offline version, you can log in on your phone. All in all, it's better. And that's why LimTrade is doing it, because they're evolving as a company, as a brokerage. They're giving you more and more better services. Philip Anthony, welcome. All right, you came at the very last 10 minutes. At least you came. That's the most important thing, because you can always rewind the webinar at your leisure. Pound dollar in consolidation, 1 hour. How long is it going to last? Months. As long as there is no real decision on Brexit with the British government, the amount of currency manipulation that goes on, they're a financial hub. So Great Britain is a financial hub to the world. They're also a Russian oligarch money laundering country, right? That's where Russian oligarchs go to invest in real estate to launder their Russian money. That's why Russians live so bad. Man, I really hope I don't get in trouble for saying stuff like this. So basically, Great Britain is going to keep their currency stable no matter what. And so what I want to say is that we're in this flat and it's going to stay flat. As you can see, they're having difficulty getting out of this channel. But as you can also see, we're not going to the top of the channel. So how a channel works is we bounce from bottom to top to bottom to top, at least in the top 3. So this line, well, what is okay? But then this line shows us, okay, we're kind of sloping down. So it looks like we're going to break down to the bottom. Honestly, that's what I think. But having said that, let me also say that, look at this area. This area right here is just a whole bunch of support. Just support on support on support. And also, we're not overbought or oversold at all. There's a triangle right here, and there's a triangle right here. Oops. It's not letting me draw where I want to draw, guys. Right here. So triangle there, triangle there. Where will it break out? With this pattern, it should break out to the top. But I don't know what that was. But is it going to break out to the top? Probably not. There's not enough good data unless the dollar just falls. Unless there's some more news from the Fed, unless some really terrible stuff happens to the dollar, which the worst has already happened. The Federal Reserve has already did what it needed to do in order to, turn down these things. Okay, let me just get rid of these brushes that I made. The last thing that I wanted to show you guys today was the negative bond yield. Oh, we already looked at that. We looked at that in the beginning, but this is just something to keep in mind, you guys. We got negative return yields. So what this means is that if you have cash and you buy US government bonds with it, you're losing money. What? So it makes no sense to use these risk-off instruments at all. So if the stock market is falling, right? We broke down below this level and we're staying below it, and bonds are not bringing us any money. This is a scary time, you guys. This is a really scary time. Like I said, last time it happened, the whole entire stock market flew to hell. Let's go back to 2007. Here we go. Negative yield. Remember I showed you the graph? Negative yield. That's what happened. But again, there were other factors that drove to this. But nonetheless, look at this. This doesn't inspire confidence. This huge fall that we had at the end of last year really does not inspire confidence. And the fact that we're at these levels and we can't, break past them for the last month also doesn't inspire confidence. So I want to leave you with the thought that if you're trading, I recommend trading either within a channel and using the options platform, or at least within a channel using Forex. Forex gives you a little bit of maneuverability. Options gives you more money. So options trading within a channel gives you more money. So the S&P 500 is a benchmark for sentiment. It shows what the rest of the world is looking like for investing. And right now we see that A, traders are not sure. B, we're more likely trying to get out of risk assets. So look for the Japanese yen growing. Look for the Swiss franc growing. Look for, this is a flag pattern, you guys, and we're at the top of this flag pattern. I would recommend shorting the franc. Actually, looking at this, my recommendation for franc is a short. You know, all the way from here, we have this beautiful little line that we've made, and it's kind of a little bit of a triangle to the top, which doesn't look good, but this is a classic flag pattern with the continuation to the bottom. There's not much of a continuation because A, we have the exponential moving average, and B, we have this really strong trend line from all the way at the start of 2018. But nonetheless, we broke below this level, and we are showing signs that there's not enough bull pressure and not enough desire to go up higher. So, but it is a tricky currency. Like, look at this. This is a huge bearish indication, and then price shot up. So really tricky currency. I just want to make sure that you guys know what the assets are, the safe haven assets. And ooh, look at this. Gold actually broke through this trend line and is showing us more bearish signals. Again, in a very choppy and uncertain time, we could drop down to the 50 EMA and then go back up. So this trend line isn't something concrete and isn't something that you should base all your trades on. And you know, we're right in the middle. So this isn't something to trade right now. But all in all, if everything continues falling, then definitely we will have gold rising, right? So keep an eye out for that. That's it, you guys. That's what we had for today's webinar. We've been here for about an hour. Oil just does not seem to be dropping. Like, I like this, that we haven't dropped below the 200 EMA. I'm not particularly bullish, but then I'm not particularly bearish. And I do believe that we still have room to grow all the way to 64. So keep that in mind as well. If oil grows, the Canadian dollar will also grow, but because they're having difficulty, perhaps it'll be either the Russian ruble or the Russian ruble and the Australian dollar that will grab this strength to come. All right, you guys, my name has been Yaroslav. It's been a pleasure to be here with you. I really am glad for the success that you have been having as traders, both personally and professionally. I'm really proud of the people that come to this webinar every day because it's hard work coming and learning every day, but you guys have been doing a good job. The thing that I want to ask you is get more of your friends involved, get more people to come to these webinars. Tell them the benefit of coming and learning together as a group, of learning from a person who actually makes sense and helps you improve as a trader. It'll help them and it'll help you if you have a bigger support group. So you guys, if you can, invite more people to today's to daily webinars. It could be either with me or any one of our other professionals that we have. So you guys, good job. I wish you guys good luck trading out there, and see you tomorrow where we will discuss everything that happened over this week, and I will give you guys some more assignments over the weekend of things that you can watch. My name is Yaroslav Birchenko. This has been at Limp Trades Thick Trend Thursdays. Oh yeah. All right, you guys. See you tomorrow.